Hello, I'm Matt Schwartz with Schwartz Insurance Group in Louisville, Kentucky. Here with another in our video education series focused on employee benefits. The purpose of our series is to teach you the basics about healthcare reform and other benefit concepts. Second is to share the latest ideas and tactics that employers have used to be successful. And finally, to position you to be a pro with regard to your benefits, communication, and culture. I want to talk today about the small group health insurance market and the kind of overall impact that reform has had. So first you have to understand what is large, what is small. According to the law, originally, 100 or more full-time equivalents was essentially considered large employer. Now, the law allowed some flexibility. Many states ended up using that flexibility and moved that line down to 50. So basically, if you have 2 to 49 full-time equivalents, you're small. 50 or more, you're large. Now, what happened in the midst of that was that insurance companies came up with actually a different interpretation. So from an underwriting perspective, they actually will view how many employees do you have on payroll, which of course makes that line kind of move up a bit. So some of them look at last calendar year, some of them look at what do you have today. So there is a little navigation, but the bottom line is, let's assume that you determine that you are a small employer under not only the law, but under the carrier's guidelines. So in that small group market, there were a couple of main impacts, really 4. Number 1 is there are 10 essential health benefits that must be covered under a small group health plan in order to be considered compliant. Most of those coverages were always in our insurance benefits, things like emergency, hospitalization, maternity care, prescriptions. Some of those things, mental health, rehab and habilitative care, pediatric oral and vision, those are new. They're essentially mandated coverages. They add a little bit to the cost of every policy. There were also what were called cost-sharing limits applied to the small group market. One of them that actually was taken away, meaning it's no longer in the law, was a limit on deductibles. We thought that there was going to be a limit of $2,000 for deductibles. That was eliminated. What did stay in is the maximum out of pocket. 2014 it's $6,350. In 2015 it moves to $6,600. And now that includes copays, which always used to be separate. Now the maximum out of pocket you can have inclusive of those copays is that figure, $6,350 in 2014. You also had taxes and fees. This was really the biggest pricing impact that we saw with regard to small group health insurance. Well, short of the last one, which I'll hit on in a second. PCORI, Patient-Centered Outcome Research Institute. This was essentially a $2 per person, so that's each family member per year. The second was a reinsurance fee, which is in essence $63 a year per person. Both of those first two would be paid for by the insurance company. So really most employers don't have to worry about it. The only time that you would is if you have a health reimbursement arrangement, HRA. You'd be responsible on your own, and those PCORI fees are due each July 31st based on the last calendar year. And then finally you had an insurer tax, and even though it's called insurer tax, that money gets passed through in terms of premium, so most carriers now just build it in. All told, those numbers add up to a 4 to 5% increase in the cost of health insurance. Now the wild card that we talk about in more detail in another video is adjusted community rating. And that's essentially the concept that you cannot use risk. Insurance companies can no longer use risk to price your insurance coverage. So that could help you if you were an unhealthy group that now gets brought down to the average, or it could hurt you if you were a healthy group now being brought up. So I hope that you've enjoyed today's topic. If you have any questions or comments, certainly we welcome them. We love to hear your suggestions. If you have those for future topics, let us know. And if you have any specific concerns that you think we might be able to assist, let us know. Again, I'm Matt Schwartz with Schwartz Insurance Group in Louisville, Kentucky. Look for the next in our video education series, and you too can be a pro with regard to your benefits, communication, and culture.